For all your real estate, financing, and investing questions, call the show's off-air number and speak with Mike Gray directly. 530-431-8586. That's 530-431-8586. Now, the Golden State Report with Mike, Amy, and Dave.
Welcome back, everybody. You are listening to the Golden State Report with Mike, Amy, and Dave. And Dave is Dave Stone from Stone Consulting Group.
Great to be here.
And Amy is Amy Debusk from Finance of America.
So fabulous to be here.
And I'm Mike Graeve from Morris Williams Realty. So happy that you have tuned in this week. Amy, I got a question for you. You know, oftentimes when we help people buy homes,
yes.
and you're part of the process because you're just such a great lender.
Thank you.
But every once in a while, there's a delay. And a delay for a day or two can, we handle it, all right? But sometimes the delay can be just a little bit longer. And you and I were talking about some of the reasons that funding or the loan process can be delayed.
Absolutely.
And you and I have talked about this because I always try to anticipate a couple of days before something's supposed to be due. Is that going to happen on time? And you always laugh at me. Mike, that's a week away. Oh, I know it's a week away, but I don't want it to be a week and a half away.
Our daily morning conversation at 5:30 a.m.
Yeah, it's pretty early.
I'm glad you guys aren't calling me at 5:30.
We're morning birds.
Wait, Amy says, "Oh, that's Mike calling. He's calling about this loan, and he doesn't have to worry." You said before, Mike, that's a week away. I said, I still want to know how it's going.
So I did come up with top 5 reasons why a home purchase is delayed at funding.
Uh-huh.
So number 1, and I see it more times than I care to admit, throughout our company, is the funds wired to escrow were from an account that the buyer did not disclose to us.
They had a hidden account?
A hidden account. Or it came from gift funds from a gift we didn't know existed. So that's number 1. And then number 2 is the CD. Everybody talks about the CD.
What's the CD?
So that's the closing document.
Okay.
So it's a legal document that we're now required to have the buyer sign 3 days before they actually sign the final paperwork.
Correct.
And so we always get that closing document out to them before we get their clear to close. And sometimes that gets it gets missed, and the buyer doesn't maybe initial one of the pages, or the spouse doesn't sign it, but the maybe the wife signs it, but the husband doesn't. And then the lender doesn't catch it until the very end. Well, guess what? By law, that needs to be signed first, and then we have a 3-day cooling off period before they can sign their final docs. So I definitely see that as number 2 reason.
I have a very serious question to ask you.
Yes, tell me.
So, CD. Why in the world do you call a closing document a CD? Is it a compact disc? Is it a certificate of deposit?
In your world, it's a CD is a
a compact
certificate
disc.
of
I mean,
deposit.
come on.
I think it's quite obvious. Closing document.
Yeah,
CD.
You real estate people are just like, but people driving down the road on I-80 or I-5 or whatever, they're just going, CD is what I'm putting this little silver thing into. Or no, this is a certificate of deposit I have at the bank.
Dave's just dated himself.
I could teach a class on acronyms in the real estate and lending community.
Oh, boy.
We're big on acronyms.
Yes, you are.
So number 3 is, maybe people don't realize this, but all banks pull a soft pull credit report at the very end, right before we go to fund that loan.
Yes.
And we make sure that you don't have any new debts. And a lot of times people don't listen to all the talk that we give them. Don't buy furniture and put it on credit.
That washer and dryer and refrigerator. Oh, well, we can take that back. The real tough one is the new truck.
Oh, yes.
Yes,
please.
that's the tough one because that's tough to take back.
It is.
Dealers just don't look favorably in taking that truck back.
No, they don't. So that can really throw a monkey wrench into the closing. And then another one I see, not often, but occasionally, if there was an appraisal reinspection that needed to be done, we usually get that. We always get that at the approval point, but it's a prior to fund condition. Mm-hmm. So it's way down on the bottom of the condition list.
Yes.
And so if you have somebody on your team, on the lending team, that didn't order it until the last minute, and then we're waiting on that reinspection. So that's another one.
Have you ever had a deal blow up because they didn't get that done in time?
No,
It's just a delay.
Nope, it's just a delay.
Okay.
And knock on wood, in my 23 years in my career, I've had very few deals blow up and at the end, and none because we did something that prevented the borrower from getting the loan.
Mm-hmm. I mean, and we've had some strange things. You know, Amy and I, we've worked together for,
20 years.
Yeah, over 20 years, matter of fact. So
Yeah.
we're really dating ourselves here. But anyway, I remember the person who part of his down payment was cash in the house. And we now have to verify where that cash comes from
Yep.
somehow, some way.
Oh, yeah.
Yes,
Wow.
currency. I mean, it was a substantial amount of cash. And when we asked, where did that come from? And it's just silence. Well, that may not work. Silence does not work in this particular realm here.
He was very tight-lipped about where that money came from.
Was he wearing a mask? I want to know.
No.
Did he have a gun? Was he wearing a mask? Did they go to a bank?
And we could do a whole show on that, but I think people have a hard time understanding the concept that banks really want to know where the funds came from.
Correct.
For a real estate transaction. There's lots of different reasons for that. And fraud and money laundering are just
Correct.
two of them. Yeah.
And a lot of the rules changed after 9/11 about just documenting and making sure everybody is who they say they are.
Yeah.
And the other thing is that oftentimes, and this hasn't happened very often, but it has happened with Amy and I, where all of a sudden they say, "Well, we want my wife on the loan too."
Oh, yeah.
Oh, yeah.
Oh, yeah. Okay, well, we have to redraw the documents.
Yep.
Well, and there's lots of rules around that, too. You can't add a borrower. We have to restart the whole loan over if you want to add a borrower in the middle of the transaction.
And then this is the one that I just shook my head at. We were going to close, and title right before we were supposed to close say, "You know what? We found that you were married."
Oh, yeah.
Oh,
I had that one.
Oh no, we've been separated for 25 years.
That didn't count.
Yeah, I'm not married. Well, no, you're legally married, okay? And so we're going to have to get somebody who's now maybe 25 years in your past, but they're going to have to sign a document saying that they have no interest in this property. Well, we couldn't find her.
Wow.
Okay,
Yeah.
so it took us a lot. I mean, we that one delayed about 14 days because we had to finally trace her down in order to get them to sign off because this person was legally married. In his mind, he was not. And for 20 years, he's not even talked to this person. So
Right.
he'd been telling everybody, "I'm not married. I'm not married."
Yeah.
But there'd never been anything done officially. That delayed our closing for about 2 weeks as we tried to trace down a person who this person had no contact with for over 2 decades.
Wow.
So there are reasons that are very, very unique that,
Yes.
that we've tried to work our way through.
Now
Yes.
we got 4. You said there were 5.
Oh, well, the fifth one has to do more with funds. The funds to close are not at the escrow company when our funder goes to fund that loan.
That's the buyer's down payment.
You go first, buyer.
Yep.
We need your money in the escrow account
Right.
before we actually fund your loan. And wire. A lot of people wire their money in.
Correct.
So wire transfers sometimes can take longer than expected, or they just plain old forgot to send it in.
So this is not the earnest money at the beginning of
No,
the
this
deal.
is the down
This is the
payment.
down
There
payment.
is money has to be
And-
within 72 hours,
Yeah.
and we watch that quite closely.
Yeah. Right.
Because a lot of deals do go south because the buyer never puts the earnest money in, and if there's no earnest money, there really was never a legal contract. So,
Yep, absolutely. Well, the worst thing that I ever had was somebody forgot to tell me or didn't want to tell me that they lost their job, and we always do a verification of employment
Ouch.
at the very end too. And that actually did blow up, Dave.
Oh, there you go.
But it's interesting, if you do this long enough, there's always those unique stories that you can
sure.
sit back and say, "Oh yeah, I had that happen one time."
No.
we need to do a
absolutely.
show on unique stories in real estate.
Oh, yeah.
think you guys have a lot.
I have some dillies, and some I can't share on the air, unfortunately. So, but they're imprinted in my mind forever.
Well, I have some exciting news for our first-time home buyers in
Great.
California. So Cal Haffa just got $80 million, and they rolled out what's called the Forgivable Equity Builder.
Okay, what's Cal Haffa?
Cal Haffa is California Housing Association,
Okay.
and they're the down payment assistance. They're
Yep.
one of the main down payment assistance programs in California.
Yeah, that's real important. So that if you want help with your down payment, this is the agency that can help you.
Yes, and Finance of America and my team and I, we are a preferred lender at Cal Haffa.
Great.
So, yeah.
So they have a new program.
So they have a new program, the Equity Builder, Forgivable Equity Builder. You guys, it's 10% down. They give you 10%, and this is the most exciting part. You don't have to pay it back if you live in the house for 5 years as your owner-occupied property. On the 5th year, they'll forgive the loan.
So if you were buying, let's just say, a $450,000 house,
Yes.
they're going to give you $45,000 as part of your down payment.
Yes, sir.
That could be almost your entire down payment.
Yes. Oh, yes, absolutely.
So very little out of your pocket.
Well, and we can use part of that 10% for the closing costs as well.
Correct.
So there's a little bit of a catch. There's always a catch, right? So you have to be a first-time home buyer. First-time home buyer, by definition, is you haven't owned a home in the last 3 years. And the second thing is you have to be below the 80% income limit in your area. So for Sacramento County and Placer County and El Dorado County, it's $81,250. So if you're a single person, you cannot make more than $81,250. If you're two people, you cannot make more than $81,250.
Okay. But it's a 10% forgivable down payment.
That's right.
That's a great program.
Yeah, sounds great.
Always use somebody else's money, and then if you don't have to pay it back, I'm all in for that.
Well, and you know what? It works because a lot of they just raised the income limit on the median income so that more people can get in on this. But a lot of times the median income is too low, and these programs don't work.
Right.
But I did the math, and based on current interest rates, and somebody that makes between $75,000 and $80,000. You might even be able to have a car payment if you have a 700 FICO score or more. You could qualify for a $450,000 purchase price.
And we know the realtor that can help you find it.
Yes, we do. And
right.
the loan officer that can finance it for you.
All right, if you have any questions about maybe qualifying for that program, give me a call, 530-431-8586. I'll put you in touch with Amy. You'll be in great hands. Again, that number is 530-431-8586. We're going to be back for our third segment right after the break. Please stay tuned.
Red roses too.